There's a lot there to unpack, and I want to hear how things have changed from those beginning days.
And someone who understands the business and has been there and has been and where you want to go, that has been, I got very lucky, had a great mentor, and has really helped me in terms of how I look at mentoring younger agents too. If you want to be $1 million agent, this is your schedule. And he had this printed out daily schedule. And what it said was, get in the office by 5:30 or 6, basically make calls all day long. It's not work to me. Like, I really enjoy what I do, and the challenge is something that excites me. But
yeah, ADUs, how does a buyer position themselves that you, the broker, is going to want them to get the deal?
Being upfront with the broker, right? Telling them your business plan, giving them as much information as to what you're hoping to achieve with the property.
I'll have to look up buku. Sounds Japanese.
Yeah, I don't even know. The origin of that is crazy. I don't even know what that means.
It's gonzo.
Yeah, something like that. I think it's a buyer's market right now.
You might buyer who's trying to buy something where you don't have the down payment money. You got to go out and raise it. You're only going to buy it if you can get a certain amount of buyouts.
And that's very helpful to tell me up front.
Welcome to All Things Real Estate with Ari Wintraub, a show where we get to meet and learn from players within and around the real estate industry. An industry that provides incredible opportunity for creativity, entrepreneurship, and wealth building. Join me as we learn the tips and tricks from these insiders and helping us to carve out a space within this massive industry. Taylor, welcome.
Ari, thanks for having me.
Yeah, you're my first guest.
I love it.
Okay.
I feel honored.
Yeah. Well, I'm excited to get into this and to get to know you some more.
Yeah.
We're going to touch on a lot of stuff, including your podcast, which is how we connected, called Vacancy. But first and foremost, tell us what you do.
Yeah, of course. So I'm a commercial real estate broker. I specialize in apartment sales here in Los Angeles. So been doing that since 2018 and really kind of focus on, mom and pop. So anywhere from 2 to 20 million bucks. I mean, I'd love to get higher, 50, working on some bigger stuff too, but anything SoCal, primarily Los Angeles, multifamily investment sales is where I focus.
Okay. Awesome. So apartment buildings.
Yeah.
Great.
Yep.
I know. Excellent. And we'll get into a lot of specifics on that, markets and areas and metrics.
Mm-hmm.
But how did you get to the point where you are now? Give us the resume, the background, and what you got and how long you've been doing
the
it.
Story, sure, for sure. So I went to the University of Alabama, and when I was there, I studied real estate as a specialization in finance. And so I kind of had in the back of my mind that I wanted to do real estate. It was something when I was growing up, I had some family friends who were on the principal side of development, and I also had some family friends, some baseball coaches actually, who were brokers.
You're a baseball player.
Baseball. Yeah, baseball was my thing. I wanted to be a professional baseball player. That didn't work out, so commercial real estate was the next competitive venture that I fell into. But really what it was I went to school, came home, was trying to figure out what I wanted to do for 6 months. And at that time, I was like, all right, let me go make some money, get a real job. I was doing like personal training and whatnot. And so I met with a bunch of brokers in Sacramento, and I said, hey, I want to live by the beach. San Diego, Los Angeles are two places that I'm very interested in. Do you know any brokers down there that you can introduce me to? So I got a bunch of introductions, drove down in the summertime, interviewed at a bunch of shops, and ended up through my aunt, who had her best friend's son was working at this company called Matthews at the time. And they were a young, some newer brokerage firm, had done some triple net lease stuff. They had some multifamily brokers as well, younger, maybe 80 agents or something like that at the time, a couple offices. And so I went in, interview went great. And the next day they emailed me and said, hey, we want you to come, you start in 2 weeks. So 2 weeks later, drove down, moved into a house. It was like $800 a month with 7 or 8 people living in it.
What part of town?
I was in North Redondo Beach. Yeah, because their office was in El Segundo.
Okay.
Yeah, and so I was at Matthews for 5.5 years, and kind of went through the ranks, like 500-600 cold calls a day, ripping calls, going on meetings, doing the networking, everything. And the business slowly started to pick up. And, I guess we're 7 years later and still doing the thing.
Yeah. Okay. There's a lot there to unpack, and I want to hear how things have changed from those beginning days. But I love the idea. I relate to this, and I always encourage people when they're coming to me asking to get in the business, what brokerage to be at. And I love that you were directed by, where the contact was and where you knew someone, because I think that is so important in brokerage and probably in any industry is, the office you're going to be in, that there's a mentor and someone that's looking out for you, because that's more important than just the brand or the office on its own.
I personally don't believe in brand in the real estate space unless you're doing institutional real estate. And what I mean by that is, and I didn't realize this until someone told it to me, but because I was always frustrated when I wasn't winning these big deals or wasn't getting a seat at the table. And because I tracked them and I wanted to get in that space when I was first starting.
When you mean institutional, what do you
Like
refer to?
50, 60, $100 million deals, these big, huge REITs who are owning these properties, private equity, things like that.
Got it.
These really, really big properties.
It's not an individual owner or small.
Not a mom and pop family, family office. These are big dogs.
Yeah.
And, I saw the bright $100 million, 9-figure sale. And like, that was what attracted me to those. And what I realized, someone told me, was that no one got fired for hiring CBRE or JLL. Right. Because it's not their money. The people who are hiring these brokers, it's the fund's money. And the investors' money, and it's not theirs specifically. And so they can get fired. And so for one of the reasons is too, because these big firms, if anything goes bad, they have to sue someone, right? And if you don't have assets for them to be able to get money from,
Right.
then like they're kind of screwed.
Interesting.
Yeah. And I never thought about it from that angle, but it makes sense. So besides that space, the institutional space, I don't think brand matters much at all. And I do think the mentorship, whoever you start, if you're brand new, like a mentor who is willing to spend the time to teach you. And it is tough being a mentor. It is not easy because there's no guarantee. There's a huge turnover in this business, as you know.
Right.
And you spend your valuable time trying to help and teach someone. And who knows if they're going to even want to do this in 6 months. Yeah. So there's a big risk, but someone who's willing to take on the time to teach you, and someone who understands the business and has been there and has been and where you want to go, that has been, I got very lucky, had a great mentor, and has really helped me in terms of how I look at mentoring younger agents too.
Yeah. Awesome. So let's go back to, that first year in the South Bay, and you are making these cold calls. Like, what's the routine like? What was that first year like? Obviously, living in the South Bay is a good time. You're in SoCal, you're by the beach. And so, what was that like in those beginning months and year of being a young, broker at this office?
Yeah. I mean, I don't know if many people would classify it as fun, for at least what I did. But I remember maybe the first couple of weeks, the CEO came and spoke to us, and he said, if you want to be $1 million agent, this is your schedule. And he had this printed out, daily schedule. And what it said was, get in the office by 5:30 or 6, make calls from, basically make calls all day long. You're doing BOVs in the morning, you're doing research in the morning. So, and then you're calling and staying till 7, 8 o'clock at night. Like 6 in the morning to 8 o'clock at night was really what they gave us. And I've always been one to one up. Like, I'm a very competitive person, so I wanted to push that envelope. If this is $1 million schedule, what's a $2 million agent schedule, right? And so the first year, what my day looked like was I always wanted to work out. I was a personal trainer.
Right.
In college. I had tried to be a CrossFit Games athlete because that competitive nature never left me. And so I woke up at 3:50 in the morning. There was a gym down the street from where I lived. So then I would go to the gym in the morning, work out for 35, 40 minutes, not much, but it was enough to kind of maintain what I was doing. And then I'd get in the office by 5:15 and just research. And really, like, people always ask, what do you do in the morning? Like, what is your time spent? There's always something to do in this business. There's never not something where you can either improve your skills or improve or organize or do underwriting or anything like that. So I would do all the admin and stuff that was not calling. And then 8:30, 9 o'clock, I'd start calling. And I'd really call probably until like 5, 6 p.m., where I got to about 100 to 120 calls. And I was speaking to maybe 20, 25 owners a day. And I would do that 5 days a week. On Saturdays, I'd come in at probably like 7 or 8 in the morning, make calls, try to get to like 50 calls, and then stay till maybe 5, 6 p.m. doing a bunch of admin and stuff. And then Sunday, similarly, I worked 7 days a week, and I still do work 7 days a week because it's not work to me. Like, I really enjoy what I do, and the challenge is something that excites me. But that was my schedule. It was 3:50 in the morning till I'd probably hit the pillow at 9:30, go to bed early, and just repeat.
No, it's amazing. It's amazing because, yeah, some people can put in the 12-hour days and start at 7 a.m., but you want to maintain and be healthy. That's a part of you and helps you balance. And, the fact that you had to wake up early and still do, I know that you have that routine. And so
Yeah.
it's incredible. Going into those calls and that 50, conversations or 20 conversations you'd have a day. I like this because, sales, and I spoke about this, video, and Grant Cardone, brings it up. It's what makes the world go round. And for me, it's like the real essence and the art of a conversation is, when one person wants something and the other person needs something, and that pitch and that conversation and that relationship. So, what was that like? What was your approach? Because I get calls, right? I'm an owner, and people call me, and I'm always amazed, and you even called me like 2 weeks ago. And
No,
I know.
it's funny. So I went through maybe 2 weeks ago. I have a call sheet. So they gave us, when we first started out, like, you'd mark X's and dashes for when you'd call, so you could track it on a paper thing. And I've tracked this since I first started in the business, and I do it every week since. So I have this big binder of papers, and I went back through all the old ones. It took me like a few hours, and I saw your name on there. And this had to be in like 2020 or 2021. Okay? And I had written your name down for some reason. I don't know if my notes were there, but I saw your name. And so, yeah, I definitely called you
Right.
at one point or another.
Yeah, I love it. But those calls we get, it's the same with me. When I go in an open house for a house on the weekend or condo, how the broker, treats me, not knowing that I'm a broker.
Yeah.
It's very interesting to me. Do they, do they engage? Do they follow up? Do they kind of hound? And so, what was your style, and what did you learn as you went to be effective, and your approach, that someone could learn from, not just in selling real estate, but selling something. That's what Grant Cardone says. We're selling.
Yeah.
We're selling, what we want to do on the weekend with our partner.
For sure. I think that was actually what drew me and has improved, quote unquote, motivation for me. And this is because I was never a natural salesperson. Like, I'm an introvert by nature, I would say. I like being alone probably more than the average person. It's just in my nature. And so I struggled a ton in the beginning. And people, how I kind of grew social a separate way was because I was so frustrated with not getting good traction on the phones that I created this flow chart. So I basically made a bunch of boxes, and I think this may be in Word or PowerPoint or something. And it would be like a yes, no. It'd be like, if I'm going to ask this question, and if they say these 3 things, yes or no, this is what I'm going to ask next. And then it would branch off, yes, no. If they say this, then I'm going to say this. And I had to literally put it in a chart, and I put it in front of my computer, and I would just literally like look at that while I was making these calls because I wasn't confident. And so it pushed me to start reading a bunch of sales books. I was constantly listening to new sales techniques or psychology, or how can I connect with someone? What's a good intro opener? I was really studying the game of cold calling because I was not good at it. And that pushed me to become more and more adept at the call. I don't even think I'm the best cold caller there is now, because some people just have the gift of gab. I have to really work to connect with someone from that perspective, to listen, to understand, and the psychology of what that is. And I'm still improving every day, which keeps me excited about the calls. I still to this day make 20 to 75 calls a day if I got some time. I love the calling. I've probably made like over 150,000 cold calls in my career, which is a lot. People who have made cold calls and hate it can't even fathom what that is. But to answer your question, my approach really is, what piece of value or information or something that is going to resonate with this person that I'm calling, to get a chance to continue the conversation. It's just like when you're writing an article or a book. The first sentence makes you want to read the second sentence. The second sentence makes you want to read the third sentence. So it's, what do I say? What piece of value can I give to get to that next conversation, that next sentence?
Right.
And that's how I approach the calls today, and notes too. If I use something on my previous call and it didn't go well, I'm going to switch it up and try something else.
Yeah.
So A/B testing, doing all this stuff, like I get pretty in the weeds and nerdy with the calls.
I could tell. And you like to have the flow chart.
I don't use it anymore. I don't need it anymore. But in the beginning, it was super helpful when I just couldn't remember, or I was nervous, or I wasn't confident enough in my skills to be able to, off the top of my head, recite and go in the directions that I wanted to control the conversation. But now I've done it enough times where I feel pretty confident in that.
Yeah, no, it's great. It makes sense. Let's sort of pull back a little bit, or zoom in and find out like what you're selling.
Yeah.
So let's talk a little bit more about the product and the industry, and then I want to kind of shift back to that and look at where you are now, and how things have shifted, although things are really similar. But what are you selling? What's unique about an apartment building asset, and so walk us through what an asset looks like, and how you guys market it.
Sure. So most of the product that we sell is again between like $1 to $10 million right now, and I can sell anything in a price point of $500,000 to $100 million. It's really the same business. Buildings are pretty much similar. There's a little more nuanced underwriting, but for what we do, I have a pro forma and Excel spreadsheet, and a lot of the properties that we sell are based upon a cap rate, a return. And so what my job is to understand what properties are selling for in the area, and figure out what the value of someone's property is. So a lot of these multifamily properties, and it's changed since I've been in the business, have been value add investments. A lot of what people want to do is come in, renovate the units, increase the NOI, and make a return on that increased revenue that they've generated from the building, right? And previously, a lot of the ways that these owners would do that was something called tenant buyouts. And so they'd approach the tenants and say, hey, would you take 10 grand, 5 grand, 15 grand, 20 grand to leave your unit because they're paying $1,000 and market rate's 2,000. I'm going to put in 20 grand in the building and then increase the market rent to 2,000. And that math makes sense because these properties trade on a multiple basis, which is the cap rate. And
Cap rate being a measure of
It's basically, if you buy a property all cash, it's the return on your investment. So if you buy $1 million building and it's making $50,000 of NOI net after expenses, it's a 5% cap rate building.
Great.
And so, yeah, and GRM is another metric that we look at, which is gross rent multiplier, which is basically the gross rent over how many years it would take to pay off the value of the building.
Right. What do you guys look at most? Like, what do you find yourselves or most owners in your space are evaluating a building based off of?
It's different. It's really different. There's some owners who basis is the most important thing, which basis is price per unit and price per square foot. Like that is the metric that they look at. Other owners want positive cash flow, so positively leveraged income. So if the cap rate's 6% and their debt constant is below that, the 1.2 is, let's say, 4%, then they're positively leveraged and they want that cash flow there.
Right.
Other owners, and previously it was easier when interest rates were lower, they may buy a property at a 3 cap and the debt may be 4.5, but they're going to be able to get to a 6 and they're underwriting to sell that at a 5.
Right.
So that's the syndication business. Is basically value add business is you take a property and you try to get the income, the cap rate, the return for you about 100 to 150 basis points, 1 to 1.5% above where you think the property can sell, because that's your spread. If you have it and it's spitting off a 7% return and you can sell it at a 5, then you make a huge amount of money
Right.
on that.
200
Yeah,
basis points.
yeah, exactly.
So let's talk about that. You were getting into that, and that's what people were evaluating
Yeah,
the buildings at based off of the improved cap rate, and they were making buyouts in a rent controlled environment where rents were stuck, 100% below market value, or 200% below market value. What has changed when owners before were using the value add strategy?
so what's changed is tenants and the city. So before, buyouts weren't necessarily like as popular as, they weren't as known as they are today. And so you could get away with buying someone out for 5-10 grand. Now there's
That's what the city guidelines were.
Yeah.
You have to give a disclosure form, an advisory to the tenant, and that was the guideline.
And now it's like $20,000 minimum. If you go through the city, you can go direct, and there's different ways around that. And people are going to probably hate me for saying that, but that's what the city guidelines are today. And so the math starts not making sense when tenants' expectations of what they deserve or want are significantly higher than the return you're going to get on the rent. So for example, let's say you're $1,000 under, but they want $100,000 to move. Maybe that math doesn't make sense.
Yeah, it might take 5 years.
So yeah, there's this math equation, and that's what commercial real estate really is. It's numbers, it's math, it's return, which is different than residential real estate, which is one of the reasons I got into it, was because I thought it was gonna be less emotional. It is less emotional. It's more numbers based, but there's still emotion in what we do.
Well, that's a great segue, because I wanted to touch on that.
Yeah.
The common question, residential or commercial. But no, that really gives us a good sense of, what you're doing. And I do want to touch on like where the industry is now, if people aren't buying value add deals, which I think there's still great opportunity.
Yeah,
For
100%.
value add, even if you're not,
There always will be.
yeah, even if you're not doing, buyouts, there's, low hanging fruit.
ADUs.
Yeah, ADUs, which I've done a couple of.
Yeah.
But let's kind of go back and you talk about the difference between, commercial and residential. I get that question a lot.
Mm-hmm.
People looking to get in the industry, they'll say, should I do commercial or residential? And what's your take on that?
So I only know Los Angeles, right? And Los Angeles is a place where I could see residential being something that I could do, right? Because the value of the properties are significantly higher typically than the value of commercial and single family homes are somewhat similar in Los Angeles, which is kind of crazy when you think about it. When you're in the Midwest and you're selling a $300,000 home, the return on your time and in the investment of selling as an agent, you're making $3,000 to $5,000, right? That never attracted me to the space. But the reason that I chose commercial, one was because the mentors that I knew and the people who were in real estate that I knew were in commercial. And so I was like, oh, I want to be like them. So I'll do commercial real estate. I never even really thought about doing residential.
Right.
And so but looking back and understanding, I think I could do pretty well in residential. I think
And what's unique is that
yeah.
LA has the market, the ability where there's the numbers where there's $10 million homes.
I mean, yeah, a ton of them,
Yes.
right? A shit ton of $10 million homes. And I have no problem door knocking. I have no problem going out and banging, the phones and doing all that stuff. So I think I do pretty well because I know most residential agents don't love to do that stuff. But I don't know if I would have learned that lesson if I didn't do commercial first.
Right.
Which was cool and nice.
Yeah, it seems that, your draw towards being systemized and the metrics and having a formula and a routine does line up with the apartments, and you're great at it. So,
what do you think the difference is? What do you tell people when they say, what's the difference between commercial and residential?
I think residential is more about, building a connection and a relationship, because the client, you're really going to benefit if you know the nuance of their life and their personal affairs, because you're going to have to align them with, the right setup in the house with the kids, or if, the in-laws are coming and having a guest quarters for them, or what they like to do at home.
What makes a really good residential agent versus just an average one? Because for commercial, it's relationships and it's knowing the numbers and skills and really like having a mind for it. But what do you think separates residential, the greats, from just the people who are in the business?
Yeah, it's a great question. And that's what is so exciting about real estate, and really why I'm excited to be doing this show, because all things real estate, it's all encompassing. And there's different ways within the industry to make money. Just the way we were talking about, there's different ways that someone's going to analyze an apartment building. Like I knew guys that were like obsessed with gross rent multiplier, and, people that want cash flow, people that buy in Santa Monica at a 3 cap just because they don't want to go east of the 405. So there's so many different ways. And what I've seen in residential is there's brokers who, like top broker at Sotheby's, out of our Beverly Hills office for decades, like she'd be chewing gum when talking to you, no, bedside manner, but she knows every house, who owns it, when it last traded, the data, the price per square foot, what else could be available. So when she's talking to these, hedge fund guys and these CEOs and these film industry execs, she could bring them value.
She's speaking their language.
She could get them the house. And so that's what, worked for her. There's the other people that, don't know every single comp and every single house and who owns what, but they really know how to care for their client. They really understand, what they need and what's important to them, when you're selling their house, that you leave it a certain way, the little details that, one gentleman that has, a new partner, and there's a whole dichotomy in the relationship and the ex and the kids, and you're like picking up those subtleties. That's the most important thing to them. Not that, the price per square foot in Studio City. And so that, is someone else's approach, and you can win and you can be successful in different ways, right? There's not only one that who's most successful. You can carve out a business and have clients and be successful and serve people well by, being strong in different assets.
Do you feel like people care about the numbers? Like how many homeowners are thinking that my price per square foot is better than the comps in the neighborhood, or I'm paying $500 above the comps? Does that happen a lot? Do they care about the numbers as much as they do in commercial?
They do if you're a developer. It's going to be more about the math and the price per square foot, but there's way more nuance. So the general answer is no. Because if you just focus on price per square foot of a house,
Yeah.
you're missing the fact that it's got a big lot and it's got a flat backyard, or it has an ocean view opposed to no view, or it's on a cul-de-sac, a busy road, the interior finishes.
How do you value those feels like intrinsic items?
Yeah, you have to, put those into.
Like, do you know the math of what an ocean view, well, you can sell something with an ocean view versus what something without an ocean view has? Like, is there math involved in that?
There's not an exact
Yeah.
dollar amount, but you're going to give it bumps. And if an area has a range of like $1,200 a square foot to like 1,600, the ocean view is going to put you more to 1,600.
Got it.
No view is going to knock you down to like 13.
Got it.
So that's how I think a broker is going to, succeed and do well, that there's, many ways around it. What do you think as a buyer is going to make you succeed? Let's say, and this might have shifted from, 2020 or even 22 when the rates went up.
Mm-hmm.
But when things were competitive, or, still you can have something competitive, something is priced right and has some vacancies. What do you see generally, even if it's not a multiple offer situation? How does a buyer, position themselves that you, the broker, is going to want them to get the deal, and the sellers as well?
It's a good question. I would say that being upfront with the broker, right? Telling them your business plan, giving them as much information as to what you're hoping to achieve with the property. Like, this is why I like it. This is why I want it. Here's where I need it to be. Just open kimono. Like this is what I want, and this is what I'm going to do with it. That helps me and understand the seriousness, because what no broker likes to do is to recommend a buyer, especially if it's multiple people, and then have them retrade or drop out or, not end up buying the deal. And so having the openness and the honestness of say, hey, here's where I'm at. Here's where, barring any crazy inspection reports that come back where it's $100,000, repair that I need to do, like, this is my number, I'm going to be here. That to me is a huge sign of confidence when choosing a buyer and wanting to work with someone, especially in a multiple situation. I think it's a buyer's market right now in the multifamily space, just because the interest rates are so elevated compared to what they were. I mean, most owners are selling properties below a 6% cap rate. Most rates are above a 6%. So they're technically negatively leveraged at this point in time. So what we found is the buyers who've been buying these buildings are not trying to hit an IRR return, because it's very hard to do so in today's market. They're one-off. Maybe they buy every 7 years, or they own in the neighborhood. The properties that are trading too are below probably $2 million, because less down payment opens up the field to a bunch more buyers who have maybe a couple $100,000 saved and can buy a property like this. But to answer your question in terms of what I look for in a buyer, or what can put someone apart, it's being upfront and honest with where you're at, and working to make the deal happen with me as well as with the seller.
Right. And it's that transparency and being upfront. It's like anything in life, with a life partner, they want transparency.
Yeah.
They want to know, what's going on, and what a past, event that might impact the relationship, or, why you're saying something, where you're coming from, what you need. And it might not all be perfect. You might be a buyer who's trying to buy something where you don't have the down payment money. You got to go out and raise it.
Mm-hmm.
You're only going to buy it if you can get a certain amount of buyouts.
And that's very helpful to tell me up front, like, hey, I need to go raise this money. So there's a chance that this doesn't happen, right? And I need to get this many buyouts during escrow. Is that going to be okay? Like those questions, those upfront of what needs to happen for you to close this deal, at least gives me the opportunity to assess the risk of choosing you or working with you, or communicating that to the seller of, hey,
Right.
here's what he needs to do to buy this. He can buy it at this price if X, Y, and Z happens. That is because I don't want to look bad to the seller.
100%.
So whatever makes me not look bad and can continue to build my relationship with the seller, that is what I look for when I'm working with a buyer, someone I can trust.
Yeah, 100%. I think there's enough deals out there that you can afford to be completely straight up and honest and carve out the terms of what you need. I mean, I'm not a big enough buyer that, I've had an issue with this. If I'm looking at 1 or 2 deals a year, I can, approach the listing agent and tell them, we need this length of escrow. We need conversations with the tenants, while we're doing our diligence. And, we might need to extend another month, to obtain financing.
Yeah.
And I have felt that the broker appreciates that a lot more,
Totally.
opposed to coming in, being vague, flip-flopping.
Well, if you've been in LA or worked in Los Angeles real estate, you know that there's certain personality types that you just have to expect and know that this is what they do. And what I mean by that is there's some people who that they're going to retrade an escrow. Like
Right.
It's just what they do.
Sure.
Right. And they may not tell you, but you've been around the block enough to know that I'm going to communicate with the seller. Like, hey, there's a good chance he comes back and asks for a credit. Like,
Right.
I know this kind of buyer. I know this person. I've worked with this person before.
Right.
Like, this is the reality. So let's put a buffer zone in there. Are you comfortable with that? So there are these kind of stereotypes that are true in commercial space, at least.
Right.
And it's funny when you talk to these owners and you're like, okay, like
Right.
they want to go tour the property because they're going to point out a crack here and something here, and they're going to ask for $50K. They were going to ask for it anyways. They just needed an excuse to do that.
Exactly.
So if I know that in the front end, I can communicate that with the seller.
Exactly.
And I feel good about it.
Yeah. No, it's the same in residential. We get a sense of, what the buyer type is, be prepared for that. Why are there so many people buying apartment buildings? What's the benefit of it? And how have you calculated the demand and the interest for people to buy, real estate and this investment property?
I think investment properties, real estate it's a hard asset, right? Some people view it as a diversification. There's obviously, if you get it to a point, there's income that you can get from it and a significant amount of income. California is great because property taxes are kind of frozen. They're very low compared to other states, and that helps with the returns. The longer you hold it, really the more valuable it becomes to you. And there's tax benefits too. So depreciation is a huge one. And I actually just heard that Trump might put 100% bonus depreciation back to 100%, which I think it's like 50, 60% right now, 40%.
How does the depreciation work?
Yeah. So depreciation and depreciation is basically traditionally an apartment over 26 and a half years, you can depreciate the value of the property divided by 26 and a half every year off of your taxes because it's losing value, right? It's getting old, and
I love that.
Yeah, exactly.
I love that. The building, the investment that you make, the IRS looks at it that it's going down in value,
exactly,
and so they give you a write-off for that.
Yes, and bonus depreciation was very popular because of something called cost segregation, which is basically you have people come in and do a study on the building, and certain parts of the asset can be depreciated quicker than other parts of the asset because their lifetime, the length of how long they're going to be lasting before you have to replace them is a lot shorter than other parts of the building. And so what you had when you had 100% depreciation was you had year one huge amounts of write-offs because you were depreciating a bunch of the value of the asset, sometimes up to 60%, 70% of the building in year one, which if you have a ton of income, it offsets basically all of your taxes. And I know a client of mine who hasn't paid taxes since was 22 years old, and he's in his late 40s, 50s right now. Like he literally has paid zero taxes.
Right, because he's getting so much write-off from the
So much write-off from the depreciation. Exactly.
When do you see an owner benefiting from paying for the cost segregation, which is thousands of dollars to have someone create this report? When would an owner choose to, move forward all that 26 and a half years of depreciation and pay for that fee? What's the sort of time length of them holding the building for them to benefit from?
Yeah, that's a great question. It definitely, I think, probably 7 years.
Okay.
Yeah, you definitely want to hold it for at least 7 years, just because what happens is it's not like the money disappears. Your basis gets lowered, which means if you sell the asset, you have to recapture the depreciation that you've written off on the building itself.
Right.
So it's not like you defer Uncle Sam, as they call it, which is why the 1031 exchange is so popular, because that is, again, another vehicle to defer capital gains taxes, which you can basically, let's say you buy a building for $1 million, you own it for 10 years, you sell it for $2 million, and you have $1 million gain on that building, right?
Unlike residential, a married couple gets the $500,000, avoidance of those gains.
Yeah. And so because it's long-term capital gains, which I believe is around 20%, 25%, something like that, you can, instead of paying 25%, 250 grand on that gain, 250,000, you can defer that and take the $2 million and buy another 2 to 3 or however much more you want to buy property, and not have to pay those capital gains taxes. You defer them into the next building.
It's a big part of your business, people needing to buy and people needing to buy because of that. So someone's going to enjoy the 1031 exchange. That's another benefit of selling multifamily, the depreciation, the long-term wealth, the diversification.
Yep.
All great reasons and attributes. So let's say someone comes to you and they're in a 1031 exchange. They have 90 days.
45 days and 180 days to close.
Okay. So someone comes to you today, you get a call. I'm in an exchange. We just sold something. You got 45 days to identify a couple replacement properties. They got $3 million. Where are you going to tell them to buy in LA?
That's a good question. I think that
And they don't want to do, they're not like going to roll up their sleeves and do heavy value add.
Yeah, it's all the relative to the person. Because investments, this is their money, right? And so some people like Santa Monica, some people like location.
They say they want good cash flow.
Good cash flow.
Yeah.
South LA is going to be the best place where you get the most cash flow.
Right.
Out of the gate, 7, 8 caps all day long.
Right.
Like that's where you're gonna get the most cash flow for renovated products.
How far south?
I mean, we're selling stuff on 81st Street,
Okay.
104th, 105th, 55th Street. Like we're
down near Watts.
Yeah, oh yeah. Right. We're doing. I mean, those returns are the best you're gonna get in Los Angeles right now.
Right. What's the downside?
The downside is that people don't love necessarily the tenant mix that you get down there, because sometimes it's harder to manage the buildings. You typically have to do Section 8 to get the most returns, which if you don't know what you're doing from a management perspective for Section 8 tenants, it can be tough. So there's
more inspection.
There's more nuances with the tenants and the requirements and things like that. That is why you get a premium on the returns that you're getting, because it's more headache.
Yeah, I imagine the price per door is extremely low down there.
You'd be surprised. It's definitely lower than other parts of LA, but we sold a deal for $220 a door, where I can sell a 1920s building in Koreatown for $110,000 per door.
Whoa.
You know.
I want to know about that deal.
Oh, trust me, I got all of them, man. I don't know if he actually want the deal, but
Right. Yeah, I like South LA.
yeah,
And that is good advice.
it's an interesting business model. It's because it's all Section 8,
Right.
because the Section 8 rents are significantly above where market rate would be. And like significantly, sometimes even in Hollywood or these other places, it's above where market rate is. So if you're willing to take on that job, you can make a really, really good cash flow return.
But that's what's so exciting about real estate. Everyone's got their criteria.
Yeah.
And you asked, this one buyer might want Santa Monica. I have my criteria. I like to buy beautiful architecture.
Yeah.
And dust off, the crud off of, diamond in the rough. And that's my, attraction. What would you buy if you were a buyer and you were in the market?
A good deal. And it's so funny because whenever I talk to someone on the phone, I'm like, so you buying? Like, yeah, bring me a good deal. And I'm like, what the F does that mean? Like a good deal? It's all dependent on what someone's definition of that is.
Right.
So I have to dig in deeper. And what I mean by a good deal is something that I know on day one, I can sell it for more than what I bought it for.
Yeah. You're making money on
I'm making money on the purchase. That to me is a good deal. That is what I would invest in. I don't care where it is. I don't care what year it's built. I don't care any about that, because I know that if I want to sell this tomorrow, I can make money. Right. And that gives me confidence in having time to execute a business plan. I have an A plan, a B plan, a C plan. Like, right. I always have those contingencies if I was to buy property over here, because that's what I see the best investors do.
Right. And that's the benefit of you as a broker being a qualified buyer, is you really know the values of something.
Yeah.
So if you're buying, a property and it's, 30-40% below the market value of what it could do after you put some improvements into it,
yeah,
then you're in a great position. So I think that's a big benefit of being a broker and being a good broker. That's what we were talking about before. Being a good agent is to be able to understand, the value of something. So being able to, speak to, the neighborhood and the value and what, a buyer is getting it for, and how to best position themselves to win it, but also be, having some inherent equity when they close.
Yeah, absolutely. And that's, people are probably asking themselves, like, how do you get a property 30% below what the value is? And it's because commercial is heavily reliant on off-market deals, because for whatever reason, people don't, listing is not necessarily the default for commercial real estate. And so if someone says they want $1 million and you know it's worth $1.3 million, right? Because you know the area, you know the property, you know the comps, like, okay, I'll bring you $1 million offer. Like that happens all the time. That, I don't know if that happens as much residential, but I would assume not as much as it does in commercial. And so that's where the information asymmetry, what makes really, really good operators and owners and investors, is because they know something or have opportunities that not everyone else does.
Right. So what do you see? And I want to come back to where I was sort of getting to, with what you would buy and what you're looking at. But what do you see as the operators, like the guys that call you, or that you call, that you admire, how are they, positioning themselves? What are they doing that is so admirable and how they're running their business?
From a making money perspective, or for getting off-market deals perspective?
Not from off-market deals, but just as operators and owners, who are the ones that, that you look at, that just like the things that they do, there's just, these guys are a well-oiled machine. I love the way they do business.
Yeah.
What attracts you to that?
I would say efficiencies. They have a proven strategy and they stick with that strategy, and they know they have ways to basically add value either cheaper or more efficiently than other people. And they have the cash to be able to close deals quickly and easily.
Yeah.
right? Because for us, time kills deals. And so if we have confident, hey, I can close in 7 days, I got a line of credit, or I got all cash, that's valuable. And some owners want that too.
I love that competitive edge, because in LA, it's a market that you can make a lot of money.
Yeah.
And there's a lot of opportunity. But you have to be, sharp and creative, and you're admiring the guys that in this space, which is really tight and difficult, know how to come in and with a really sharp pencil, value add efficiently.
Yeah.
Close, quickly, and be able to, make a winning deal when so many people are intimidated by it.
Yeah, they can make winning deals out of deals that many people couldn't.
Right.
They have the skills, whether that's negotiating buyouts, whether that's the cost of construction is cheaper for them. Like, there's so many tools in their toolkit to make a deal work compared to an average person like you or I necessarily, because they've done it for so long. They have relationships with banks where they get better debt. They have contractors that'll give them, better prices. Like, there's this web of time that they built in their network that gives them the efficiencies that a lot of investors don't have.
Yeah. But at the same time, like, I don't want that to be taken as a deterrent to younger, less sophisticated buyers. Because again, I keep coming back to this. There's so many, ways to make it work or to skin a cat. Someone who doesn't have those banking relationships, that might not have the contractor relationships, what they have is more time.
Yeah.
What they have is more patience. And through that, they can manage better.
Yeah.
They can retain their tenants for longer because they have the time to, like, send them a Christmas card.
Yeah, 100%.
Or pick up the phone or go tour the property, every couple months, and, be thoughtful on the design of it, that you can go there and they could work with, the contractor to improve the aesthetic. So there's so many ways that I find that, and I'm sure you're surprised by it. Like, oh, these guys are doing something kind of different. Like, I didn't know they do like events for their tenants.
Yeah.
And they just don't need what they did with this outdoor space, in lieu of having parking.
Mm-hmm.
So bringing it back to you, I know in some interviews on your show, which, everyone should know about, and how we found each other.
Yeah.
No Vacancy.
Thank you.
I know you're up getting close to 30 episodes.
Yeah. It's been fun.
And you've had some incredible guests, and I've been learning a lot, and it's how I found you.
Yeah.
And
thank
so
you.
It's super exciting to be sitting down and getting into all this. But I know on one of the recent episodes, I think it was with Farhan and the guys from Tryon, who are super sharp, you alluded to this balance between wanting to grow your business as a broker, and you're a young guy, under 30 years old, trying to grow. And I know you have staff, and you have, support, and you have marketing expenses, between, feeding that and then also getting in the game and buying your own real estate. So where are you with that? What's, the goal and the struggle? Because I think a lot of people go through that.
Yeah, it's interesting because it is something that I've struggled with. And one of the reasons that I've struggled with it is because it's almost dumb not to own real estate because of the tax benefits as a full-time real estate professional. The way the tax code's written, I can write off all this depreciation expenses on my ordinary income, which is the commission income that I make, right? So if you make $200,000 in a year and you buy a property for $1 million and you can depreciate $200,000, then I don't pay any taxes because of my job. And so that's something that's super interesting to me, and you get to build wealth, right, through investing. I think it's silly not to own real estate unless you're making buku money, where like you're making $4, $5, $6 million a year, and over 10 years, like, you'll be fine. You know what I mean?
I'll have to look up buku. Sounds Japanese.
Yeah, I don't even know. The origin of that is crazy. I don't even know what that means.
It's gonzo.
Yeah, something like that.
Right.
But to answer your,
But it's that idea. It's like that cash flow quadrant.
yeah,
With, the rich dad, poor dad, Isaki guy. You know, are you going to be an employee, a salesperson, or are you going to be an owner or an investor?
yeah,
And sure, if you're making $5 million, you're an executive, or you're just top broker, and
you can put that money in the stock market and be fine. Right?
exactly.
Yeah.
But for most people, you're talking about the need to feed the other side of the quadrant, which is through people working for you, owning a company, or through investments.
Yeah. And the struggle between investing in the business and the real estate is because you can do the math too on investing in your business, and if you're good at it and you have consistent flow, like the ROI is unmatched from any investment that you can make in a real estate deal. Right. You can get a 150% return on sending clients gifts or something like that. Right. You send a $300 fruit basket and they list their house with you, and you're making like,
there's not a lot of expenses as a broker to operate your business.
Unless you have support staff and technologies and stuff like that. If you really go and invest heavily in the marketing side of it and all that stuff. But the math of investing in your business makes a ton of sense if you're good at it. The tough part is you don't want to be on a treadmill for the rest of your life. And so if you're not making millions and millions of dollars in commissions and you have a down year, you still have expenses, you still have life. Right. It's great to have $15,000, $10,000, $5,000 coming in a month from your investment real estate you can feel comfortable living, right? And
10, 15 is great. It takes a little while to
get there.
For sure. Yeah.
But that's what I think the challenge is understanding the balance between reinvesting in the business and increasing that commission income versus investing in my future and, maybe making less now, but over the lifetime having that cushion.
Yeah. No, it's definitely been a journey for me and something I contemplate, versus building out a team versus, managing my own properties. What are your goals in terms of that? And what are you trying to achieve in terms of making an investment in a real estate purchase?
I don't have goals from investing at this point in time. My goal is to get to a certain level of sales right now from the brokerage business. Like I have, that waypoint for me. So I'm doing everything I can to try to get to that point.
Smart.
Yeah. And once I get there, then I can pull my head up and figure out what adjustments I need to make or have the time and the bandwidth to figure out, okay, I have this now.
It's great.
What needs to happen?
It's nice that you got clarity on that, because you're going to be successful if you have a plan and you stick to that plan and you're not feeling disorientated and sort of blown by the wind.
Yeah.
I want to do this. I want to do that. What day am I doing this or that?
Yeah.
And, you're a young guy. You're 27 years old, right?
Mm-hmm. 28.
28.
Yeah.
And, if you focus on building your business for 5 years and you buy your first apartment building, you're still not even 35 years old.
Yeah.
You're way ahead than 90% of the people.
Yeah.
So, that's...
I got time on my side, which is nice.
Exactly. That's a great answer. Well, I know we are starting to wind this down. The last stuff that I wanted to cover, which we have touched on a lot, are a series of questions that I want to put at every guest. But ahead of that, I think it could be fun now.
So almost 7 years.
So 7 years you've been doing this. Any memorable story, situation with tenants or in your, day-to-day sales of these apartment buildings all over the city, or owners or phone calls or house visits that...
Yeah, a million.
Here.
I mean, a million. I think the best story is not mine, but it's another buddy of mine in the industry. So
we can give credit.
Yeah. No, he was doing a property tour on a building in South LA and doing walkthroughs, right? So under contract and walking through the units, making sure everything looks good. And one of these units he came to...
I sometimes hate those units because I've gotten high I'm famous for being very sensitive. Even last night we went out to an art show in the arts district, and to drive, in LA you can get stoned pulling up to a traffic.
Yeah.
So I'm really affected by secondhand weed smoke, and everyone's smoking all over the city.
Yeah.
So you go into someone's home, they're not gonna stop puffing just because the brokers are coming through.
Totally. But he basically was touring this building, and the tenant opened the door, and he was butt-ass naked, just fully butt-ass naked. And he's like, "Hey, we're here to tour your unit. Okay, all right, we're going to come in." And he's just like checking out the unit, doing the thing. And the guy's just sitting there, just like, "Yeah, all right, just fully naked, Tenant didn't care at all. So I thought that was really funny. And he told that we were dying in the office. Yeah.
Oh my God.
Yeah.
That's incredible.
So, and that happens all the time. There's many worse stories.
Disclosure to the buyer, that there's a nudist. And
Yeah, I don't think you have to put that in the disclosures. But it was, there's so many other stories that is just crazy that you'd be shocked at how people live. That's when I was like, wow, crazy. But yeah, it's interesting nonetheless.
Yeah. Oh, it's great. It's amazing. All right. So let's wind things down. I got this series of questions, just for them, starting with, where do you want to be in 3 years?
I want to be a top broker in Los Angeles. So on multifamily property, 250 million per year in sales, with a team of 2 to 3 agents and 4 to 5 support staff, and just crushing multifamily sales.
That's fantastic. Yeah. I'm sure you could, plot out the details of how you're going to get there, knowing you're a really systemized guy. That'd be a great business, and you don't want to hear.
I'll be stoked. Yeah. It's going to be great.
Outstanding. And then going back 10 years, although you've only been in the industry for 7, but going back, 10 years, you're late teens, you're getting out of, you're going to college, or, around the time you're coming out, and, you're looking at, career-wise 10 years ago, what would you have done different?
Nothing. Nothing. I think that the only thing that I ever think about is like building something that has equity, right? Because brokerage is really hard to sell your business. So, but I don't take back anything. I would just look and figure out if I'm going to spend 100 hours a week doing something, like, is it something that I'm super passionate about, and the long-term effects of the sacrifice now will be worth the equity value moving forward. So that's something that I would just ask yourself if you're in that age of, like, in 10 years, where do I want to be? And am I willing to put in the work now to get there, and, suck, eat shit for 10 years and get there?
Right. Exactly. And that's why you wouldn't do anything different, because the stuff that you've spent 100 hours a week doing is stuff that you see, could get you towards your goal. Favorite book, movie, and song?
My favorite movie is the Oceans series, like Ocean's 11.
Oh, cool.
Ocean's 11, Ocean's 12, I love those kind of, like, I don't know, just the Steven Soderbergh crushed that filming. I just love the way that movie's filmed.
I got
the long zooms. Oh, it's just incredible.
Yeah, Soderbergh.
Book, that's a great question. Probably, I love Chris Voss's book, the Never Split the Difference.
Of course.
I just think that was like a paradigm shift in the way that I communicate. So really enjoy that book. And then you said music.
Yeah, favorite song or band?
Song. I love Frank Ocean.
Yeah,
Frank Ocean is I could listen.
Whatever happened to him?
He just, he's doing his thing, man. He's doing it. I'm waiting for the next one, but I came later in life to Frank Ocean, and just vibes, man.
Yeah,
100%.
Love it. All right, and then you kind of touched on this before, of building towards something, and so what's your one thing? Why are you doing all this? What's it for?
Yeah. I think I'm doing this because I love the challenge. I love the struggle. I enjoy working on hard things, and I enjoy working on hard things with other people. And so for me, that one thing is building something to be fulfilled and satisfied in what I'm doing with my life and the opportunity that I've been given in having this life. And so I think whatever I do, whatever it is, as long as I feel like I'm moving forward and doing it with other people who are also enjoying it, that to me is fulfillment.
I love it.
Yeah.
Yeah.
All right.
Beautiful.
Thank you.
Cool. Yeah, Taylor. Thank you, man.
Appreciate it.
All right.